in this video as well, and this stream, webinar, whatever you want to call it, I'm going to discuss why I don't use stop losses and why you shouldn't use stop losses. Now, it might sound like an unpopular opinion, but I can promise you it's not. As soon as I learned how to do this, it became the only way I trade. It's still the only way I trade. I don't use stop losses whatsoever, not one stop loss. I just do not do it, okay? And there's a real vibe around the trading world that you have to use stop losses. You know, if you're not using a stop loss, you're at enormous risk. Everything's horrible. You know, you're going to lose all your money. And it's just not the case, okay? It's just not the case. And the reason why, you know, is because you can use DCA, you can use set sizes, okay? So you won't go over a max size, and you can use hedging, all right? And these three things, when you put them together correctly, work excellently, okay? Obviously, that's in my academy. So if you go underneath the video, you can do that. Thank you, Matabu. Great to have you on. US 30, sure, I'll get to that. But yeah, as I say, it might sound unpopular opinion, but you don't need to use stop losses, okay? If you're new, perhaps, okay, yes, you do. And I do have a little bit of training for that. But mainly when you move on to expert stuff, well, I would deem it expert. I would deem myself that way. You know, you can stop using those stop losses. Now, the reason why is because if you look at gold, and obviously I'll run down my view on it as well for Daniel, who asked, you know, you've got your short move there and you've got a short move there. And obviously, if you follow me, you know, we're anticipating another one. Now, it is practically inevitable that this will fall, okay? And it will probably do it just like you've seen before. Now, the reason for that is, again, why I don't use stop losses. I know eventually this market is going to fall. Now, of course, in that case, the game then becomes, well, when is it going to fall? And can you survive a move that goes up and up and up before it falls? Now, the answer to that is yes. And the reason why is because if you have specific tools to deal with that, then you're okay. So firstly, as I said, it would be DCA. So let's say you bounce off this point here, and I'll draw it with an eclipse. Okay, you had this low. We spoke about it long, right? It comes up. So you might say, okay, well, I'm up here now, and I'm going to get short. So you short there. The price comes down a bit, and you exit. So you get profit on that. And then let's say you come back about there. Okay, so let's zoom in. Let's say the price comes down here like that. Okay, you've got your profit. I'm going to draw a green line for this. You've got your profit there. Okay, you've made your money. And then it comes up and you reshort again where I've drawn this red line. Now, what happens is the price goes up, doesn't it? It goes up to here. And at this point, a lot of people would say, okay, well, I want to close out. You know, I want to take a loss there. Now, the reason why I say I don't use stop losses is because once you've come up there, if your trade size is small enough so that you end up here and you're still not losing all your money, you're never going to have a problem. But even so, with that, on all these candles to the upside, as you can see, where I'm labeling them, I'll just change my color. On all these candles to the upside, you could have bought, okay? You could have hedged and you could have bought. And you'll notice that these are weeks, not days. So for 14, 21 days here, you could have bought and then exited, bought and exited, bought and exited sideways. And that would have made enough money to close out this short you got wrong. So the short you got wrong is basically artificially stopped out by hedging. Okay, and you repeat the same thing. So if I shorted up here, so this isn't a hedge, it's a new short. And then obviously, I'm just going to get rid of all of that. If I shorted here, you can see the market comes up again, 1 candle, 2 candles, 3 candles, 4 candles, okay? And then eventually what happens is it falls. So I hedge up here, okay? I could reshort, which then makes me profit on the fall, and I could reshort on all of these lines, and then I could actually close out this short I took when the price rebounds. Now, the key to all of this, as I said, as well as DCA, is set sizes. You might have heard me say that a minute ago, okay? Now, what set sizes means is that I know at any time based on my equity, I am never going to go over a certain size, so that in the event you come up here, you're not going to be margin called and closed out. So with your hedging, with your set size, that's how you would survive. So that when you get up here and the market is still rampant, and Daniel, I'm now going to get to your question. You've got your stochastic coming up to your overbought zone. You've now got the opportunity to have priced in this without actually risking much at all. And you're now ready for that fall. So that's where my bias remains, because if you look how far you've come up already, it can only go on for such a long period of time. Okay, you've already had 1, 2, 3, 4, 5, 6, 7 move. I know that's a red candle, but you don't drop significantly. So you're practically 7 months up. Okay. And if you look before, you've got this bull run here. Okay. But if you look back before that, you've got a really deep drop. Okay. So it's no surprise it comes up that far. And it's the same beforehand. So at this point, you've had a small drop and you're coming back, and you've had 7 months straight up. At this point, you should not be buying. You should absolutely not be buying this. All right. And it's easy to see why. Okay, you've come up so far already. So what this looks like now is basically a stalling market sideways. You don't have any real south side impetus. In other words, you're not getting it slammed. Okay, so you basically, again, like I was saying, you don't want to buy it fully, but if you pull back here, there's all this price action, and you could hedge. You could hedge long. And that's what I basically teach in my plans, because you've got a mixture of key MAs here and you've got that support right there. Now, I said on a post I did that literally I did it. You can see this on my profile. I was saying, I think you'll pop up somewhere around there, and you did. Okay, yesterday I called that quite nicely. You can go and watch that on my profile. And it's fallen down. And what you're seeing is a fall to early support again. Okay, nothing strong. You're too late to short it. Okay, if it comes back up here, I would take another light short. That's my preference, Daniel. So you don't want to short yet. It needs to push up. You've got a lot of market news, so hopefully that will cause some volatility. But if you're more risk averse, you don't know how to hedge, and you're not in my academy, then you just want to trade it short, because if you're trading it short, you naturally have far higher market value and therefore a better bias. So in Coin, great to have you again. Fantastic to see you. Guys, tons of people in here. If you can smash that boost button right now, that would be absolutely amazing. Okay, please press it, and then please do ask me something, because I can help you. There is nothing I cannot answer. Often, a lot of attendees, a lot of my members say, I really appreciate the way you do things, because it's very factual. Getting this short is factual. If anyone tells you to buy this, they're going to cost you an extreme amount of money, because you are going to get wasted. You are going to get wasted if you buy this. It is going to fall, okay, and it's going to be strong. It has to. It's unsustainable. This cannot just keep going and going and going without this, okay? And if, I always say this as well. If you don't believe me, if you simply just find this too hard to believe, just open your eyes and scroll back. Go to your monthly chart. You say, oh, it won't fall, Will. It'll just keep going. Okay. Well, that is what everyone says on all my editors' picks. Every single editor's pick where I make a massive call and the market gets absolutely ruined, the common reaction is, well, it's going up and up, so I should be buying it. And it's wrong. It's absolutely wrong. That is a skewed mindset. Okay. That is why people lose money. They buy high. Okay. They buy up here after the move. Okay. After. And they use stop losses that are really tight, so they fail to short it the whole way. Okay. So they can't catch market value. They can't catch a big fall. Would you rather buy there? Yes. Would I buy there? Buy there? Would I buy here with no dip? No. Okay. You're only going to get a push up after a dip. You don't have a dip, so don't buy it. Philip, Hey, Philip, great to see you. Academy member, fantastic to see you. Thanks for coming. Have you got any questions, guys? Any charts? Thank you, Matabu, for your US 30 suggestion. US 30, you can see here the ticker, Dow Jones Industrial Average Index. I like this long at the moment, but what I would say is I wouldn't buy it right now. I think you're going to trickle down to that 200 MA. My bias remains here. Again, I'm not using a stop loss. If I was trading this, I'm not looking at these candle wicks here and putting a stop loss underneath them. No thanks. I am simply scaling in. If the price comes lower, okay, I need a higher time frame for this because I can't see much. Price comes lower, I'm long again. Still no stop loss. I'm not putting a stop loss there. I'm just taking it long. Okay, so that's your risk averse zone. That is zone 1 where I've just drawn. Give me a moment. Just get rid of the eclipses. I like it long there. The reason why I'm doing that is because if you look at this up candle, it's weak, early rejection. And there's far more strong PA here. If you want those full rules, and yeah, absolutely, Philip, we've done great with both assets there. If you want the full rules to understand why your hit rate will naturally massively increase if you follow what I just said, because you're using key PA rules, it's not definite, okay? It's not definite. This is not financial advice, but in my experience, if I trade where there's lots of price action, lots of rejection, you have a natural higher probability of a push up. That is why I'm letting it fall to key support. And if you look at your stochastic oscillator again, you're way down. Why would you sell? You don't want to sell at those points. If you can smash the like if you're coming in, and if you want to get on board with all the rules I'm talking about, change your trading today, do something today, and do it before the news comes out as well, because there's so many people on the internet now, which fortunately for myself, I'm able to save from financial ruin in their broker account. I've stopped people getting wasted, and I've allowed people to be consistent. A lot of my guys say that. They say they're now experiencing green months in profit, which is fantastic to see. And please do keep me up to date with that. But if you do want that, http:// it's actually free. If you press that link, you get a free opt-in. Okay, so go to that link. It'll be under the video on YouTube. So in coin, do you have any questions? Philip, FTSE and S&P. Absolutely. As I say, an Academy member. I'm just going to do the FTSE via this ticker. There's so many of them. So the FTSE I'm trading now, I got fantastic long. I know, so InCoin got this as well, which is great. At this current point, right now, I'm lightly long. I'm lightly long, and I'm looking for hedge gains. That's point 1. Now, I wouldn't be surprised if the market keeps going. But again, I'm not shorting. I am not going to short. I will take that lightly long in case it pops up in the near term. Otherwise, I am pending long at 766 at this point. I am pending long 766. Just look at it. Does that look like it's strong to the upside to you? Okay, I know I said I'm buying a tiny bit, but it's tiny on purpose. I've got a set size, okay? Set size. Get it in your head today. You cannot decide that you want to buy $1 million of something and $1 of something else. It needs to be consistent. You need the same size regardless. If the risk goes up and your equity, your drawdown increases, you change your size. If the asset gets more risky because of the news, you change your size, okay? If you've got really strong PA to the downside, you change your size. If the market is already rallied really high, you change your size, okay? My long size was tiny because the market's up. If you don't understand those rules, you will get wasted, okay? Yes. Okay, the answer to that is yes. Short overall bias on the FTSE. Yes, Philip, absolutely. Well done. You're learning well there. That's correct. Overall, yes, I would say there is room for it. However, you're getting really close to this, at which point it's no longer the case. So yes, but only a little bit left, and I'm long at that point.